Hi guys, how's it going? I was really excited to hear that compliance was coming up over and over and over again during these presentations. What I was really excited about was a really smart investor a couple of talks back actually said that being compliant with regulations is a competitive advantage for fintech companies. So by the end of this talk, I hope to show you how exactly your company or any company can actually use compliance as a competitive advantage into the future. So with that, what we're going to cover today, first we're just going to start, make sure everyone's on the same page. What exactly is money laundering? Basically what compliance teams are fighting against. Next, how does it happen? So we'll cover some of the more traditional use cases and some of the more innovative use cases that the bad guys use. Finally, we'll take a look at how compliance teams actually fight these use cases. And then next, we'll talk about the shortcomings. And finally, the opportunities where you can innovate and take it and actually use compliance as a competitive advantage. So we'll start just as a baseline. What exactly is money laundering? So essentially, it is concealing the origins of illegally obtained money. So typically, the way it works, a bad guy will make money doing something illegal, such as drug trafficking, firearm sales. And then what they'll do to conceal that where that money came from is they'll start moving it around financial institutions many, many times over. And they'll also use legitimate entities to put that money through. So when it comes at the end of it, it's really difficult to see where that money was originated. And then they get to go spend it on fun things like, looks like a mix of a Bugatti and a Ferrari. So how do we actually think it happens? I mean, when I think about it, I picture a overweight, middle-aged Russian guy with a furry chest and a gold chain going with a bag of money to go throw it into a laundry machine and then come out and go spend it at God knows where. And for the record, I am Russian, so I get to make fun of Russian stereotypes. But unfortunately for us and everyone that's involved in fintech and compliance, it is a little more complex than that. So I'll cover some of the ways that we've seen, at least at Trulioo, how bad guys are trying to launder money. Traditionally, it's just been through financial institutions and remittance companies such as Western Union and MoneyGram, but they've gotten a little more creative. So in front of you here, you have an online poker room. Not an obvious use case for money laundering, but if you think about it, it's actually a great way to launder money. So imagine you have two bad guys, and they go into the online poker room, and they start gambling. So one of them puts in a lot of dirty money into the online poker room, and then they just start playing hands. So one guy might have no pairs and then is betting on all in on his hand, typically a really bad hand. He's probably going to lose the money. But he tells his buddy, who happens to have a full house that hand, hey, I'm going to go all in, you go all in, and then you'll just take my money. So what that money now looks like is clean money. It looks like gambling winnings, right? So the poker room will take a small cut, but the money comes out clean, and now they get to spend it without any repercussions from banks, right? You get to go buy all the fun stuff like the Bugatti and Ferrari we mentioned. So next, e-commerce, and particularly e-commerce really acts like marketplaces nowadays. If you think of Etsy and Amazon, tons and tons of merchants putting their products online. So typically not something you'll think about if you're trying to launder money through $15 Kindle ebook sales, but I actually went and searched and found one of the most expensive books ever put on Amazon. So in front of you, you have The Making of a Fly, Genetics of Animal Design, that went for $23,698,655.93. So you can see how someone that buys this book from a merchant can really easily launder a lot of money really quickly. So say they put this book up for sale, and their buddy out in Russia is taking dirty money, selling it through e-commerce, and now that money looks clean. It just looks like e-commerce sales, and they just happen to be crushing it from people in Russia. So I hope you're starting to see a theme here. Any entity that helps people change money from one hand to another is liable for financial technology, for financial compliance. So you immediately think about banks and companies like that, or remittance companies, but actually the web is spreading really, really wide. So we covered two digital cases, now we'll cover two in-person cases. So what place in the world will welcome you with a bag of money with open arms and not ask any questions about how you actually obtain the money? Well, Vegas, of course. So you can go into a private poker room, you can give them a lot of money, they'll give you a bunch of chips, and then you can go have the time of your life, gamble, do God knows what, and then they'll cut you a check with, say, Caesar's name on it, right? And that money is now clean. Now it's gambling winnings. And it's clean. And the reason I use Caesar is actually they got in trouble for this exact use case just about 3 weeks ago. So they let really wealthy people come in with bags of money, go gamble in private poker rooms, and then they gave them Caesar's checks that looked clean, but found that it was actually really dirty money that they were letting people gamble with. And finally, Bitcoin. If there ever was a financial vehicle to launder money, what better thing to use than Bitcoin? It's anonymous by nature. It's really easy to exchange it into different currencies, and it's international. You don't even need a bank, right? It's distributed. So a lot of companies nowadays, like Coinbase, if you ever sign up for Coinbase, they actually do a great job of verifying you. It's actually a really stringent process. But you can go to like an ATM, just start funneling dollars, and then they'll spit out a Bitcoin, and then you get to go take that money and use it anywhere you want, right? You just exchange it to whatever actual currency you want. And Bitcoin, the government just 2013 just started really looking at it more closely for the purposes of anti-money laundering. And some companies have really screwed it up. So one of the first companies to allow people to buy Bitcoin instantly, BitInstant was the name, is actually now defunct. It's out of business. And unfortunately, the founder, he's a really young guy, Charlie Shrem, is just starting his 2-year jail sentence. So really big deal. Governments are frowning upon companies that are not taking AML and KYC seriously. So what exactly, how big is this problem? So governments estimate that it's about $1.6 trillion gets laundered every single year around the world. So to put that in context, it's about 2.7% of the world's GDP. So governments probably frown on this for a couple of reasons. So one, governments disagree on a lot of things around the world, but they can probably agree that funding terrorism, human trafficking, drug trafficking, things like that, is bad for society overall. And this is usually what this money gets used for, unfortunately. And then finally, depending on where you live or where you're from, that 1.6 trillion equals about $600 to $800 billion in tax revenue. So that's a lot of money that the governments are missing out on an annual basis. I mean, it's the size of some global GDPs. So for that reason, the governments, about 40 years ago, they started really cracking down on this, and they've created a bunch of laws that require every financial technology company, well, essentially any company that helps people move money from one person's hands to another, to comply with these laws, which is why we have compliance teams. We have a gentleman that was just up here before me, mentioned that JP Morgan actually hired, was it 8,000, 6,000 people to help with this problem, because it is a really big problem. And unfortunately, some companies don't get it right all the time. And then the government comes down with big hefty fines. So just in the past couple of years, there has been over $10 billion in AML, anti-money laundering, and know your customer fines. And just a caveat, if you work for one of these companies, I am really sorry. Your logo's up here. I know it wasn't your fault, and I do owe you a drink if you are offended. But you can see the diverse nature of these companies. At the top, you see the big banks, right? The obvious ones. At the bottom, you see less obvious ones, such as your kind of new payment processors, your new money movers, and you actually see a Bitcoin company up here too, Ripple Labs, or a cryptocurrency company. And actually, fine isn't the worst thing that can happen. So I use the example of BitInstant. The company went defunct. The CEO is now in prison, starting his prison sentence. This is not the only case where it's happened. So a large company, MoneyGram, actually went through its own problems, and they screwed up their compliance team so bad that the chief compliance officer got fined $1 million personally. That's not to MoneyGram, the big bad corporation. It's to one individual, $1 million fine, and he got a few years in prison. So fine is one thing. There's a lot of them going around, but if you really screw it up, the government actually sends the individual responsible to prison. So how do fraud and compliance teams actually fight these use cases? So it's a really tough job, but essentially it boils down to two things. So one, they have to know who they're doing business with. So if you've ever signed up for an online bank just to deposit money, even though it's an online bank, you still have to fill in things like your address, your date of birth, obviously your name, and that's really so they can verify you, really so they know who they're doing business with, so they know you're not a criminal, right? And then finally, it's stop the known bad guys. Then after they get that information, they validate that this information is accurate, you're actually born on this date, you live at this address, then they have to go ahead and ping, there's about 20 to 30 global databases around the world that track known terrorists, known bad guys, known criminals, things like that, and then you have to go check against that. So it kind of sounds easy, right? Why does JP Morgan need 6,000 people to do it? Well, to put it another way, the fraud and compliance teams actually have to verify 7 billion people across 196 countries. And it gets better. So in each one of those countries, they could potentially have different regulatory requirements. In one country, you can have one way to verify someone. Another country, you have a total different way. So here we have social security number. India, now they have Aadhaar. And the list goes on and on. So they have to find the right databases to verify someone, and they have to make sure that they're not a bad guy and know who they're doing business with. And then they have to refresh this once every 6 to 12 months. So that's why JP Morgan needs 6,000 people to get the job done. Not that easy. But there are a lot of shortcomings. So sometimes the compliance teams have to be extremely careful, especially when they know it's their ass on the line, and not so, to put it in not so many words. But it gets really hard because with the data providers that they use, which typically include things like credit bureaus, telco companies, governments, only really do a good job today of covering about 30% of the world's population. So the developed markets, think like US, UK, but places like India, someone else mentioned the Indian credit bureau market's only about 12 to 24 months old. It's not developed like it is here, where it's been established for 30, 40 years. So those data providers, they're not that good yet at providing the regulatory compliance that companies need and are used to in developed markets. So what happens is a lot of people are left out. A lot of people are not accepted into some of these financial services. So domestically, start with millennials. So 18 to 30-year-olds, and oftentimes the first thing that they do, they might open a bank account, but they're not accepted to get a credit card. And the reason is there's not a lot of information on these people, right? So it's the first financial product that they have. And there's not a lot of data behind it. There's not a lot of data on them, so the bank doesn't trust them yet to do business with them. And next is emerging markets. So they're really left out too. So as an example, 41% of India's 1.2 billion population is unbanked, so no bank account whatsoever. And that's again because they can't solve that first step yet of verifying who that person is. Even though it's a developing nation, there's still AML and KYC laws there. So again, opportunities, exactly where the challenges are. So one, it's millennials domestically, and then two, it's emerging markets internationally. So millennials, again, 28% are completely unbanked, and then over half are underbanked. So what does underbanked mean? It means they probably just have a bank account where they store money, but they're not actually given access to financial products such as credit cards, loans, things like that. That's why there's fantastic companies out there such as LendUp, the presenter recently, that are able to provide these individuals money. That's, again, it's a data issue. Either you can't be verified or there's not enough data on them to be able to determine if they're a good credit risk or not. And companies like LendUp are able to use alternative data sources to make those decisions. And then finally, frankly, millennials don't like banks. So about a third believe they actually don't need a bank at all in the future. And another third are open to switching banks altogether. So a lot of millennials actually don't even like the products that they're getting from banks. And finally, the really, really big opportunity is the 5.9 billion people in the emerging markets, and actually makes up about over 80% of the world's population. And 59% of those people are unbanked completely. And one of the reasons, actually one of the top reasons they cite that they're unbanked is that cost. And usually its cost is because the data cost, the time it takes to verify them, because it's a really manual process if the data isn't there. So some of the things that we get here, the emerging markets actually don't have. The foundation isn't laid down yet. So we have e-commerce here, peer-to-peer markets, banking, credit cards, all that fun stuff. But they can't do that yet, and our companies from here can't go in there yet because the data yet isn't established to verify them. It all comes down to compliance. Can't launch in one of these markets until you solve that first step, or else you're liable to those big bad fines that we saw earlier today. So this is where Trulioo comes in. So we are one of the companies trying to solve these problems, and these are where the opportunities that we're after. So what we've created is essentially a data marketplace where we have partnered with over 140 data providers that cover close to 4 billion people across 40 countries through a single API. So what we do is we help companies such as payment processors, banks, e-commerce companies really grow internationally and cover their AMLKYC needs. So that first step, verifying who that person is and making sure that they're not a bad guy, so they're not liable for those fines. So here's some of the snapshots of some of the clients that we use. So it's remittance companies, peer-to-peer networks, payment processors, banks, companies that are really trying to grow globally and need their compliance needs met. So they might have the technology in place, but you still need to start with that first thing, and that's verifying who you're doing business with and making sure that they're not a bad guy. So if any of this was of interest, here's my contact information, toly@trulioo.com. I'm more than happy to share any of these slides and talk further if you want to chat about anything I've discussed. Thank you so much.